thank you for the invitation to speak to all of you at Casa Asia. Let me start with a summary of the key messages from our Asian Development Outlook report, which Javier mentioned was released last month, late last month. And oh, sorry, let me see if I can, there you go. So 4 key messages. First is that COVID-19 cases in Asia started rising again in the last month or two and hit new highs this month. The slow start to vaccination campaigns also adds to concerns that the pandemic may be far from over. Our second key message in the report is that the economic recovery has started, but prospects diverge within Asia. Some economies are returning to normal and are seeing growth boosted by exports, while others are contending with domestic outbreaks and dampened tourism. A third key message is that regional growth is expected to rebound by 7.3% this year, led by the PRC and India. I'll talk about India in a bit, before moderating to 5.3% next year. And inflation will remain relatively benign. Fourth, the main risk to this outlook still centers on the pandemic, including renewed outbreaks and delayed vaccine rollouts. And finally, we do worry about long-term scarring from COVID-19. And one analysis in the report looks at the impact of school closures, which have been substantial, not just in Asia, but globally. And we also, in the report has a theme chapter. And the theme chapter this time is on how green and social finance can help lay the foundation for a more sustainable and equitable recovery. The full report is available for free at adb.org. adb.org/outlook is the direct link. So let me walk you now through some charts that illustrate these main points. The black line on the chart on the left shows that new COVID cases in developing Asia peaked around September last year at about 25 cases per million, or that's about 106,000 cases in total in developing Asia. Successful containment measures in the second half basically brought that number down from over 100,000 to about 32,000 by end February. But in part because of new variants, cases surged to 93,000 by end March, which was the cutoff date for our report. And it peaked at about over 400,000 cases in developing Asia, or about 104 cases per million by middle of this month, by mid-May. So this really highlights that the pandemic is far from over. And the right chart shows that vaccination rollouts in developing Asia are still in the early stages, and progress in the region varies considerably. So many economies are facing difficulties in procurement and deployment of vaccines. There are several economies, several small economies, which are the bars at the top, including Palau, Maldives, Mongolia, Nauru, Singapore is there as well, have vaccinated a substantial share of their population. Most large regional economies have not. So the best performer in that regard actually at this stage is China, the PRC, where but even there, they've deployed like 31 doses per 100 people. And we're counting here doses administered, not full vaccinations. For many other economies, including India, Korea, Indonesia, and several others that don't even show up on this chart, like the Philippines, they're well below the global average and really just in very early stages. So for the region as a whole, 17.5 doses per 100 people, that's below the global average of 20 doses per 100 people. So amid the pandemic's ups and downs, Asia is experiencing an economic revival, but it is uneven. So what this chart shows is that year-on-year GDP growth, which is shown by the white dots for Q4. So GDP growth in Q4, which are the white dots, are improved relative to year-on-year growth in the first 3 quarters of 2020, which are the yellow dots, in 8 of the 10 largest economies in developing Asia. The Q4 improvement was particularly strong in the largest economies, in the PRC and in India, which you see on the left. Several of these economies, including China, have data for Q1 already, and Q1 showed even continued strength. In some cases, much stronger, in part because, like in China's case, they had their pandemic during the first quarter of 2020. You can also see from this chart that the improvements came on both the domestic and external front. The contributions from private consumption, which are the blue bars, became less negative or actually turned positive in Q4 for 7 of 10 economies. And the contributions from investment, which are the orange bars, also improved in 7 of 10 economies. On the external side, net exports, or the contribution from net exports, which are the gray bars, were a bigger boost to growth in Q4 in 7 of 10 economies. Basically, external demand for manufacturing products contributed to a rebound of net exports for the PRC, Republic of Korea, Singapore, and Taipei, China. The recovery is also supported by a strong manufacturing revival. We see this in the left-hand side chart here, which shows the Purchasing Managers Index, or PMI, for manufacturing. The blue line is the global PMI, and the black line is the PMI for developing Asia, excluding China and India, which we show separately in the orange and the green lines. Manufacturing activity, as you can see, basically increased steadily through the second half of 2020 and has stayed in expansionary territory in the first months of 2021. And the upturn in manufacturing activity has really gone hand in hand with strengthening trade, which you can see on the right-hand side chart. Global and regional exports have rebounded, as shown in the black and green lines. So after the contraction in the second quarter of last year, you see continued improvement in global and regional trade exports. The region's export recovery was first driven by a surge in exports of medical supplies and protective equipment, and then by electronics. So PRC, which is the red line, that's been particularly strong. So the rebound in PRC was really evident even in the second half of 2020, when basically a lot of other economies were shut down, whereas China, had contained its domestic outbreak and was able to reorient supply. And a lot of it, again, was electronics, domestic goods, and medical equipment and supplies. What this means also, given that focus on those specific sectors, is that the regional benefits have been unevenly spread. East and Southeast Asian economies that export these products saw the strongest gains, but performance, for example, in Central and South Asia was less good. Remittances in the region were also relatively resilient and didn't collapse by the 20% that some had forecast. So the World Bank had a report in mid-2020, for example, expecting remittances globally and in Asia to contract by 20% or more. Developing Asia's remittances were actually up by year-on-year in 2020. And as you can see in the left-hand side chart, some economies such as Pakistan and Bangladesh actually saw substantial increases in remittances, but there were also substantial declines in remittances in some Central Asian economies. And as you can see, remittances were a large share of GDP for these economies, and so that was a particular drag. Unfortunately, while remittances were reasonably robust, tourism still shows little sign of bouncing back, and you can see this in the right-hand side chart. Tourist arrivals have remained depressed since April 2020, and they've risen only in the Maldives, which is that red line on the right, which opened up in July 2020, much earlier than everybody else. But even there, international tourism arrivals are still down 23%, and in almost all the other economies, international tourist arrivals are down between 90 to 100%. And so this has contributed to severe recessions in tourism-dependent economies, whether it's Georgia, Maldives, or Thailand, or many of the Pacific Island economies. So the improving economic situation, as you saw from increasing manufacturing and trade, as well as substantial monetary and fiscal policy support, has led to improving financial conditions in the region. The left-hand chart documents the continued narrowing of risk premiums in regional bond markets. And we don't show it in this chart, but equity markets also in the region also showed strong gains, and FDI and portfolio flows into the region continued. The orange bars on the right-hand side chart show that a majority of Asian currencies strengthened against the US dollar since October of last year, which is when we put out our ADO update. However, some countries weakened during this period, the ones near the bottom, and that includes Myanmar, the Myanmar Chat, the Sri Lanka rupee, and several the Lao kip, and several Central Asian currencies. Okay, looking forward, the outlook for Asian growth is positive. After a 0.2% regional contraction in 2020, progress on vaccination rollouts and recovering global demand will support a rapid economic recovery in developing Asia this year. As I said, we forecast growth at 7.3% in 2021. That's much higher than average growth in the past 5 years, in part because growth is being compared with a very weak 2020. We expect regional growth to moderate to 5.3% next year. And the growth trajectory, though, will not be uniform across subregions, and you can see that from this table. Central Asia, Southeast Asia, and the Pacific are projected to see more moderate growth this year, with growth picking up in 2022, while some deceleration is expected in 2022 in East Asia and South Asia after rapid growth this year. Another way to document the divergent recovery paths, and sometimes it's a bit easier because 2020 really screws up the growth rates. So another way to look at it is not to look at growth rates, but to look at the path of GDP levels. And so what you have here is GDP levels. The chart on the left shows that for the region as a whole, developing Asia, after a mild contraction last year, the red line goes down slightly in 2020. The rebound in regional growth this year and next, it'll still leave GDP for the region below the pre-pandemic trend. So even with a 7.3% and 5.3% growth. In other words, the recovery will be incomplete. If you break the region up into its different components, though, if you look at the PRC, which is green, the green line in the second panel, it looks quite good. There was no decline last year. They continued growing last year, and it will get quite close to trend by next year. Contrast that to India, shown in blue in the third chart, which experienced a substantial and large contraction in 2020. And so even with a sharp rebound this year, GDP remains well below its pre-pandemic trend there. For the rest of developing Asia, taken together and shown in purple on the right, the contraction last year was not so sharp, but the rebound is also more modest. So turning to inflation now, inflation in the region will remain muted during the forecast horizon, despite rising international commodity prices and concerns about inflation elsewhere, in particular in the US. Substantial slack in many economies in developing Asia will keep a lid on inflationary pressures. So we expect average inflation in developing Asia to fall to 2.3% in 2021 from 2.8% last year, driven by lower food price inflation in India and in China as well. Prices are forecast to rise by 2.7% in 2022. That's still, again, very reasonable, still below 3%. So the current environment is highly uncertain, and we feel that risks still remain tilted to the downside. The main risk to the outlook is really an unfavorable evolution of the pandemic, and India is really emblematic of that. Significant and protracted outbreaks like we just saw, or like we're currently seeing in India, require renewed mobility restrictions. Vaccine rollouts also face challenges in procurement and deployment, and later on in vaccine hesitancy, which is substantial in a few of the economies in the region. We are also concerned that if new variants emerge that are relatively immune or that are where the vaccines are not as effective against these new variants, that also poses a risk. Other downside risks, looking beyond the pandemic, include geopolitical tensions. So even with the new administration in the US, it's still the case that there are tensions between the US and China on trade, on technology, and even in terms of security issues within the region. We also worry about political turmoil in some of our economies, supply chain bottlenecks, although there it's primarily, we think, a transitory phenomenon. As many economies globally and in the region start opening up, you see supply bottlenecks in certain goods, whether it's goods or services, whether it's semiconductors or shipping. Those will emerge, but we think those will be transitory. Another risk is tightening financial conditions, including a possible repeat of the taper tantrum in the US. There as well, we think the risk of that is quite low in the near term. And even if it did occur, developing Asia is in good shape to handle it. And I can talk a bit more about that in Q&A if there's interest. Lastly, we do worry about long-term scarring. And as I said, we talk about school closures and the need for green and social finance to support the recovery. So let me just end with a summary of the key messages, a recap. Again, the pandemic is still far from beaten. Vaccination plans are still in early stages. Recovery has already started, though, although it really has diverged. Some economies are really being boosted by growth. Others are struggling with domestic outbreaks and weak tourism. We expect 7.3% growth this year and 5.3% next year, and inflation will remain benign. And lastly, the main risks still stem from the pandemic, including renewed outbreaks. So let me end there, and I'm happy to take questions.